Hello everyone, welcome to the most important video of this series, which is known as fundamental analysis. Before starting anything about it, I would like to think that before you invest in any shares, you have to do three types of analysis. One is the fundamental analysis, second is the industrial analysis, and third thing is the economic analysis. This video will be based on fundamental analysis and we will understand in this analysis I have to analyze the company's financial performance, profit and loss account, balance sheet, and everything. So let's start. What is fundamental analysis? This analysis helps an individual to decide which shares to invest. Okay, basically there are two subparts of it: quantitative analysis and qualitative analysis. In quantitative analysis, we do balance sheet, means BS means balance sheet analysis, PL profit and loss analysis, etc. In qualitative analysis, we do management analysis. So what is the management of the company? How many shareholders are there? Dividend and all. So we also discuss all these things together. Basically, this video will be focused on quantitative analysis, that how to analyze the balance sheet of a company, how to analyze profit and loss of a company, all these things. So let's start. There are basically type of expenses: capital expenses and revenue expenses. Capital expenses refers to those expenses which occurs after a particular interval of time, means certain in 5 years or 10 years. Capital expenses means suppose a business has purchased some machinery. A farmer has purchased a tractor. The purchasing of tractor by a farmer is considered to be his capital expenses, as it is a huge amount of funds is involved in it. But revenue expenses means the purchasing of seeds, purchasing of fertilizers by a farmer, we say it as the revenue expenses, as it occurs now and then. And capital expenditure which occurs at a particular long period of time, suppose in 5 years or 10 years, something like that. So there are two types of expenses: capital expenses and revenue expenses. Now financial analysis includes balance sheet analysis, profit and loss analysis, cash flow statements, notes to account, and a statement of change in equity. Whenever you are going to purchase the shares of any company through your broker, say if it is grow, then in that application you can see that fundamental analysis is given: the revenue of the company, balance sheet of the company, cash flow of the organization, all these things are mentioned, and you have to review all these things before purchasing shares. These are quite very important, and how to review that I will make a different video on that as well, that how to review this balance sheet, PL and all. There is a video on ratios which you can by watching that video you can understand the true meaning of all these things which I am speaking right now. Then types of financial statements. There are two types of financial statements: consolidated financial statements and standalone financial statement. Now, before starting this thing, I would like to ask you that you must know about what is a subsidy. A subsidiary, right? Tata Sons. If I talk about Tata Sons, Tata Sun is the parent company. You basically know Tata has huge amount of products: Tata Salt, Tata Motors, Tata Power, many things are there. But the parent company, the main company is Tata Sons. See here, suppose Larsen and Toubro, it's a company. It has its head office, it has branches outside India. So now leave about subsidy and Tata, we will come it later. But now let us focus on Larsen and Toubro right now. So L&T has head offices, it has branches outside India. When the financial performance of headquarters, HQ means head office, branches, and outside India are taken together, is called stand-alone financial statement. Now you must wonder, right? I am taking the financial statement of the head office as well, branches as well, branches outside India as well, but still I am saying it's not a stand-alone financial statement. So remember this thing first, that when the financial performance of the head office, branches, and outside India branches are taken, it is known as stand-alone financial statement. So now what is consolidated financial statement? For this, we need to understand about subsidiaries. Suppose Tata Sons. Tata Sons is the holding company, means it is the main parent company. Within Tata Sons, we have Tata Motors, we have Tata Salt, we have Tata Coffee, and all these small parts. So when the entire financial performance of this small parts are taken together, it is known as the consolidated financial statement. It includes the subsidies as well. Now one more simple example. About Red Chillies Entertainment Private Limited, which produces this films and all. And a Byju's application, the learning app. So see, Red Chilli Entertainment Private Limited is a parent company of Byju's. Byju's had been purchased by Red Chilli Entertainment Private Limited. So the and suppose Red Chilli has its branches in Delhi, Pune, Mumbai, and Byju's have its branches at Kolkata, Delhi, and Pune. The overall performance of Delhi, Pune, and Mumbai is known as the financial. This finance of Delhi, Pune, and Mumbai is the standalone financial statement, and this of Byju's, that is Kolkata, Delhi, and Pune. For Byju's, it is known as a standalone. For Byju's, it is their standalone. For RCEPL, it is their standalone. Now, when these two are mixed together, we say it as the consolidated financial statement. Means in consolidated financial statement, the financial performance of the main company along with its subsidies and associates are also taken into consideration. Just remember this thing, don't get confused. The consolidated financial statement includes the financial performance of the main company along with all its subsidies. There is a difference between subsidy and branch. A branch means the same company has its branch, but subsidy means it has different set of business activity. Baiju is a subsidy of Red Chilli Entertainment Private Limited. So Byju's is a different company, and there is this is a film company, RCEPL. So this is they have different business activities. So it is a subsidy. That's the main difference between subsidy and a branch. So this is something known as consolidated financial statement, where the financial statement of the main company along with the subsidies are also taken into consideration. We say it as it is a consolidated financial statement. Now understanding subsidy, Tata Sons has Tata Motors, TCS, and Tata Coffee. Tata Sons Tata Sons is the main company, and this all three is the subsidies. Now, branch means office of the same company, as I have told, and subsidy is not a branch. As I've told that Red Chilli Entertainment Company is a parent company of Byju's. So when this Tata Motors finance is taken, TCS finance is taken, Tata Coffee statements are taken, and it is mixed up together, we say it as it is a consolidated financial statement of Tata Sons, when subsidies are also taken into considerations. Just remember this thing is quite very important. Now what is an associate? You must have seen about that many people write there are an associates. What is the meaning of associates? A company A holds share in the range of 20 to 50% of company B, then company B will be an associate of company A. Consolidated balance sheet includes statement of those of the companies, its subsidies, and its associates as well. If a company A invests between 0 to 19.9% in a company, then it called a simply investment. See, if you purchase more than 51% of a particular organization, that organization you are the owner of it. If you purchase between 20 to 50%, you are an associate. Company A holds share in the range of company A has purchased the share of company B in the range of 20 to 50%. We can say that company B is an associate of company A. It is known as an associate. And if you purchase shares between 0 to 19.9% in a company, then it will be simply called an investment, nothing else. This is a major difference which you must understand about an associate. Now, what is a regulator? A regulator is one who regulates the operation of day-to-day working of any organization. For bank, we have Reserve Bank of India. For stock market, we have Securities and Exchange Board of India, SEBI. For insurance companies, we have IRDA, Insurance Regulatory Development Authority of India. For mutual funds, we have AMFI, Associates for Mutual Funds in India. These are the regulators of different branches. Okay, so that's all about this video. We will be talking about ratio analysis and how to analyze different ratios before investing. I hope that you like this video and stay tuned for further videos of this session, of this series. Thanks a lot.